Well, hello guys, it's Victoria with you and welcome to my YouTube channel. Here I trade binary options on the PocketOption platform, and in the description below this video you'll find a link to my private Telegram channel where you can ask me any questions you have, and you'll also find a link to my private Telegram channel where I share my daily trading signals. I also run weekly marathons to help you increase your deposit from $150 to $5,000, guys. This happens every week, so make sure to join this marathon. In addition, if you text me on Telegram, you will get a link to sign up for PocketOption with a gift deposit 50% absolutely free as a nice bonus. As we can see, the price is growing rapidly, so I will go into the $200 purchase, I think. I propose to discuss today habits of an effective investor. Investments have been popular and familiar in most developed countries for many decades among different segments of the population, from housewives to business magnates. Over the past few years, the topic of investment has begun and gained popularity in Russia. The number of individuals with brokerage accounts on the Moscow Stock Exchange in 2021 increased by 2 times compared to the previous ones and reached 16.8 million, and by the end of July 2022 their number exceeded 20.8 million. That is, approximately every 5 residents of our country has the status of an investor. Just 10 years ago, in 2012, the number of individual investors didn't reach 1 million. Whereas in 10 years, growth is 26 times. So their stereotypes of investments are available to the elite have disappeared and the infrastructure has become closer. You can invest from a mobile device in the intervals between work or activities. Whether opening a brokerage account and trading securities doesn't mean becoming a successful investor. By the way, the deal brought me plus $378. So I go on and go into the purchase for $200 as the price increases. Another outstanding investor is Peter Lynch, America's best financial manager, irreplaceable. It's all about him. A guy from a simple family forced to start earning and paying for his college tuition early and conquered the tops of Wall Street. During his management of the Fidelity Magellan Fund from 1977 to 1990, the fund's profit grew by 2,700%. He outlined his financial experience and principles in the books Fighting the Current and Beating Wall Street. Warren Buffett, he considered Benjamin Graham his teacher. Benjamin Graham, sometimes known as Ben Graham, is a well-known financier and professional investor, the father of value investing. A difficult childhood has formed character, a serious attitude to money, a willingness to work hard and save. An early lesson in the risk of speculation, his mother lost all her investment in the crisis. The importance of safe investing. Benjamin Graham started his activities on Wall Street when there was still chaos. The US Federal Reserve was recently established. The Securities and Exchange Commission was not there at all. Companies published reports. Irregular accounting frauds were often found in the reports. So most believe that the stock price was determined more by emotions. The numbers were of interest to anyone. Graham changed the approach to financial analysis, and meanwhile the deal brought me $370 again. So the price dropped slightly while we were talking after closing the deal, but I still see the potential for growth, so I'm going to buy for $200. What about finances? There are options. It's better to use them in complex. We increase active income, career and salary increases, part-time work, change of activity. We will not rent for a long time. We're looking for opportunities and we're doing it. without any fashionable motivation, if necessary, if we want. Accounting for income and expenses. It's necessary to have a clear understanding of where the money goes, what the fixed costs, variable costs, which expenses are unnecessary and can be reduced, and how much to leave for unforeseen expenses. A dollar saved is a dollar earned. Buffett is said to consider this Scrooge quote the real wisdom of an investor. And Buffett himself says, if you spend money on something that you don't need, soon you will risk starting to sell what you need. Accounting for expenses will help even if there is no specific goal yet to learn how to save money. So the first capital will appear, the understanding that this is possible and where the goals will come in time. You can save, for example, from 10 or 20% of permanent income and half of the rest. What does Uncle Scrooge said about this? When making a budget, do not forget about a piece for yourself. After all, this pie is yours. And what's how I became rich? I gradually increased my slice. So, and what does Buffett say about this? 20% of your earnings should go to savings or to pay debts, if there is any. So meanwhile, the deal brought me $378. So the price didn't move much. So it also rolled back after closing the deal, but I'm still waiting for growth. I go into the purchase for $200. The market is volatile. It will always grow and adjust. This is its specificity. If an investor cannot accept this and calmly react to ups and downs, rationally evaluate and filter news, he probably should not do this. This is the opinion of the Graham and this disciple Warren Buffett. It's hardly worth arguing that. And after all, Warren Buffett, for example, has experienced more than one correction and more than crisis during his investment activity. He earned his billions, and what would happen if every time we corrected, he fled the market, selling off his assets cheaply? So meanwhile, the deal brought me plus $378. So the price has grown well while we were talking. I continue to follow it and I go into the purchase for $200 again. Investment protection. As has been said more than once, investment is always a risk, to one degree or another. This is due to the volatility of the market and its exposure to a large number of factors: economic, geographical, social, corporate, and even the behavior and judgment of the craft. Not always what affects the value of shares. Also, no one can predict the future. An analysis of the past behavior of the price, as well as the fundamental analysis of the issuing company, suggests the likelihood or further development of the situation. Doesn't guarantee anything. Smart investment strategies involve the creation of a risk-protected portfolio in such a way as to bring the maximum possible return to an acceptable level of risk. This achieved by carefully selecting assets in accordance with its strategy and diversification. Broad enough to reduce risk, but not too broad to maintain the ability to fully manage the portfolio. And meanwhile, deal brought me plus $378 once again. I thank you for watching this video till the end. Don't forget to like it, make sure to subscribe to my channel because there is always only useful information and the most interesting analysis. So guys, that's all for today. Thank you for watching once again and see you in the new video. Good luck in your future trading sessions. Bye.